Hi, folks, and welcome. It's Sunday night, and I find myself, of course, checking in with the markets. So let's take a look at what's going on here. We can see NASDAQ. Right now it is 6:41 Eastern Standard Time, and we can see NASDAQ futures currently up 1225. ES futures currently up 250. And I spend the whole weekend waiting around for our futures to reopen to see what the VIX is doing. We had an interesting week in the VIX last week with markets making some extraordinary gains to the upside. We saw volatility staying pretty firm. Several days we had VIX up, vol up, and we saw also a divergence between different VIX products. So for example, one day we had the XIV down while SVXY was up. So when I'm not making videos and interviewing traders, I spend a lot of time actually trading and also on the web. I love to look at Twitter like a lot of us do. And I found some great tweets this week having to do with the market. Let's pull a couple up and take a look at them here. So last week up here, so U.S. stocks VIX dance in tandem and break with history. Let's see. This is from Reuters. A rising U.S. stock market normally reduces fear among investors, but the blistering pace of the current rally has instead also driven up the anxiety factor in the market. The S&P 500 index and the SIBO volatility index, which is the main gauge for measuring investor fears that benchmark stocks will drop in the near term, has moved in rare tandem form. On 9 separate occasions this month, the VIX has matched the direction taken by the S&P 500 on a given day. That marks the most times these two measures have moved concurrently in the same direction in all but 2 months over the last 5 years. So that is the story that we're getting a lot recently is market up, VIX up, market down, VIX up. Now volatility has not hit a extremely elevated level. If I do pull up a VIX graph here, VIX chart, and I extend it out a little bit. This is just a 1 day. Let's look at 20 days. Okay, so in 20 days we have a range between about 12.4 and 10.8. So many of the people I brought on have said that the VIX average historically is around a 20 or something. So between 10 and 10.8 and 12 is still very low, but that's high from what we've seen in the last couple of months. Let's back this out to 180 days, a half a year. So if we look for half a year, we're going to see that indeed we are in the middle of the range right now. So in a year we had spikes up to 14.5. We had an all-time low of 8.56. I think that was in the middle of the day, if I'm not mistaken. But that is the all-time low in the VIX in the last 6 months. But that's the all-time low recorded as far as I believe. So you can see we're right in the middle of the range here. However, being in the middle of the range has a lot of times been a sale because either things go sideways and it goes lower, or basically any fears fizzle out and it goes lower. So if we take this graph and then we look real quickly right after at the UVXY graph, you're going to see how it goes straight down. Now this is what happens when you combine futures in Contango with a VIX that is basically just range bound. Now every VIX is range bound, okay, so that's not a great description. I should say and the VIX, it's in a low range and not really doing that much. Now, if I back this up from 180 days to 3 years, that gives you a much better picture. Now look at that. Okay, you see us trending downward. You see that we're very low in the range here at 11.8 in the VIX. And you're going to see that spike from 2015 there to 53. Now, when you look at this graph, you see that it sort of oscillates back up and down, but it doesn't clear from that graph that there's going to be a huge spike soon. There's no way to tell, of course. So let's go back for a second to Twitter. Let's try to go back to, let's go back to me. All right, so in Twitter, there's another guy who I found who always has awesome stuff, and his name is Michael Listman, and let me pull him up for a second. Okay, so here's Michael Listman, and he loves to banter back and forth with this Chris guy, anyways. But Michael Listman loves to put spreads on, and I think that I'm not sure exactly why he does. I'm hoping to get him on soon. But one of the reasons I know is that he considers the put spreads he puts on to be a more conservative way of trading the VIX, in that you have a limited risk trade. So when you buy a put spread, you know how much you can afford, how much you can lose. So for example, if a put spread is between two strikes that have $5 between them, the most you can lose on a put spread is the distance between the strikes minus what you pay for it. So if you pay $4 for a put spread, and the most you can lose is $4. Well, anything that you buy, the most you can lose is how much you pay for it. Let's start with that first of all. But a put spread and a call spread are the inverse of the same thing. So if you're buying a put spread, if there's $5 between the strikes and you're buying a put spread for $4, you're selling the call spread on the other side for the price of the strike minus the premium. So if it's a $5 between strikes and you paid $4 for the put spread, $5 for the difference between the strikes minus $4 in premium is $1. So if you're buying a put spread for $4, you're actually selling a call spread for $1. So UXVYTRADER picks put spreads that he feels pretty confident are going to end up being winners. So for example, if we look at UVXY here, let's go back for a second to our screens, and if we look at UVXY here, let's just look at a 10-day chart here for a second. Or actually, let's go out to a 180-day chart, okay? So right now we're in January, and we see that UVXY has been moving down. It's kind of hung up here a little bit, but that, as long as we're in Contango, means it's even more likely it's going to go lower. So he's picked a put spread, for example, the March 10-12 put spread. So what that's doing is you're buying, or let's widen it out a little bit. How about the March 10-13 put spread? So you're going to buy the March 13 put, and you're going to sell the March 10 put. So let's go to March here for a second. So let's look at the March 9th expiration. And if we buy a March 13 put and we sell a March 10 put, okay, there's $3 between the strikes. The cost is $2.40. So you're paying this spread if UVXY ends up below $10 at the end of March, this spread will be worth what? Well, the put that you bought for the 13 put will definitely be in the money, and the 10 put will definitely be in the money. So the spread will be worth $3 at the end of March. So you're going to pay, if you pay $2.40 for it, and it's going to be worth $3 at the end when it expires, then you're going to collect that 60 cents difference. And if we look back at our chart at UXY, it's very likely that 2 months from now, this is going to be below $10 because it's already been in the $10 range since the beginning of December, and you've got Contango working at an average of 5%, if not more, since December. So it's pretty much likely that this is going to end up below $10. So one spread that he would recommend would be to buy that March 13-10 put spread. And if you do look on his Twitter feed, and you scroll down, you'll see a variety of recommendations for put spread. So here, for example, is a very similar put spread to the one I was talking about. This is the March 9, 12-10 put spread. So 12-10 put spread, if you pay, there's $2 between the strikes. If you pay $1.60 for it and it ends up being worth $2, then you're getting 25% return on your investment. So that's when you buy this put spread, the 12-10, you're going to win if UVXY at expiration is less than $10 in price. And like he says here, very safe strikes. Should I be kicking myself in a couple weeks for not going with the 8 put, but slow and steady wins the game. And with someone like Mr. Listman here, I've been tracking him for a long time and watching him put these spreads on and watching them play out and watching him be successful at creating this these profits over and over again. So 25% return on investment. That means if you bet $1,000, you will have $1,250 at the end of this time period. So if you bet $10,000, you'll have $12,500 at the end of this period. Now there is some risk involved, of course. This could spike right before March expiration, and your risk is the $1.60 you pay. So if you buy one put spread, you're paying $160 to make $200 if all works out. However, what we can do with a trade like this is if UVXY goes significantly below $10, you can take the trade off early. So for example, this spread, if UVXY goes to $8, this spread could go, depending on how much time there is to expiration, but let's say this spread could go to 180 and you could take it off, take your 20 cents, and free up that capital to deploy elsewhere, having made a profit. So trades like this are the kind of trades that the guys from Tasty Trade would talk about managing trades on. By managing it, I mean when it's profitable. Once it's profitable, think about taking it off, because let's say things go really well for UVXY as far as shorts, and UVXY is trading $7, and this is the spread. You can sell it out for $1.90. Better to take it off, take your 30 cents, and lock in that profit than hang out for that last 10 cents and maybe it spikes right before expiration, you get nothing. Now, I'm saving one of my favorite guys for later here, and this is a guy, his name is Matt Thompson, and he has, he's a really smart guy. He's really witty, and he comes in with these great tweets all the time, really timely, on point, and super smart. And I'm just scrolling through here a little bit to see what he's got going on right now. And it's funny because it's a small group of people. So you see him here quoting Stevie Vix, the guy we were just talking about. Let's look at this Stevie Vix quote for a second, because this is one of his best ones of the week. Okay, so check this out. This is a beauty. XIV, SVXY. This is just what I was talking about. Now this is from the 26th of Jan, and we see on the day, okay, SVXY up, XIV down, which is pretty amazing. And this is the kind of stuff that was going on last week that makes you say, is volatility trying to tell me something? Is, there's some tracking error going on right now with volatility. But let's get back to Matt Thompson for a second. So Matt Thompson and his brother are both Chicago guys, and they've been around for a while, and they've solely specialized in managing money, and specifically, Matt's gotten really into the VIX lately, and he's always got timely information and advice on the VIX. His avatar is hilarious. The guy from his avatar refers to him in American Psycho, which is a much recommended movie if you are into the markets at all. But anyways, I've been following Matt Thompson for a while, and I didn't really know anything about him. But I do know that he comes through with these timely tweets all the time, and I decided to do a little digging. So I did a little research on Matt Thompson. He is currently with Kaizen Advisory LLC. They have a few financial products, and Matt has some great tweets, and he sort of specializes in these graphically illustrating things. And about 6 months ago, he came up with one that was really awesome. And it's simple, but it just shows the graph of successful days in UVXY over the last like 5 or 6 years. Let me pull this one up. Okay, so XIV returns and index values prior to launch. So some of this information is kind of backed out from before it started trading. I'm not sure when it started trading, actually. I think it was around 2011, but I'm not positive of that. But you can just see how many green days it's had, and then you can see the big outlier moves it made south. And then on the right side of this column, you can see which years it was down, and you see it's had some huge years. But if you look at 2017, 187%. It's never had a year that big. It's had close ones, but if you look, you see it doesn't consistently have returns like that. So if you're thinking that you're going to be able to just buy XIV and have a year like last year every year, it's illustrated right here that that's just really not going to happen. So anyways, I was curious about Matt, so I decided to have him on to talk to him. I reached out to him, and he came on to talk with me for a little bit, and so here's some of that conversation that Matt and I had.